All right, hello everyone, and welcome back to a brand new price action study. Here's what we're looking at, for the week as far as for news drivers. Very much high impact news drivers, primarily in the AM sessions throughout the entire week. Now, I'm not gonna act like I know what half of these mean, but I will say I understand that at 8:30, 8:30, 8:15, 10 a.m., 10 a.m. right these days, that these high impact news drivers will have some impact on price, as they are high impact. Now, what that means, we don't completely know. So let's go ahead and start with our analysis here. All right, NQ, bullish, no indication to expect price to continue lower. Noted that we are in an order block, and noted that we've seen a consolidation. We'll focus on that more in a moment. Bullish, bullish. So let's go down to the weekly. Okay, weekly. Consolidation before this down move. So look at the last up closes before that down move. Price trades the halfway point, reacts off of it. Currently, we had this just aggressive run. All right, this aggressive run targeted these lows down here, but didn't take it and pressed through higher. So ultimately, I'm still looking to see price respect this, and for now, even though the weekly candle that we're on seems as it will go lower, I'm still expecting higher prices because I have no indication to expect anything less or anything otherwise. Now let's go to the daily because we're going to refine what I mentioned in my last video here. So we're talking about quarterly shifts. Now, one thing I didn't mention, I tried looking for different manipulations, in other words, in the chart for these quarterly ranges and looking at that in correlation with quarterly shifts. Now, the point that he made with those manipulations, or say it's NQ making a lower low, aka sweeping stops, while the US dollar makes a higher low, aka showing weakness. All right, what I didn't mention is that is for accumulation. So if I was, say, right here, okay, well, we're halfway through, as far as from this high to this low. There's no reason that I would be looking at that particular level in price action. And so therefore, what I was looking at wasn't necessarily relevant for the concept that I was trying to backtest or implement. Now that we understand that, we're still going to take quarterly shifts at face value and understand that quarterly there will be a shift. We know how to mark it. You get the first of the month. All right, and you want to make sure there's at least a month of price action data. Then you look 20 days past, 20 trading days that is. That's going to be a quarter. All right, that's 1 month, 2 month, 3 month. Noted by 20, 40, and 60. So, ultimately, now that we're on the daily, let's see how the bias that we have plays in the current price action. Well, here on NQ, here's that higher time frame order block consolidation before that aggressive movement, retrading into this order block before that down move. All right. Now, price previously had shown a willingness to return to that, reaches just below equilibrium, and bounces off. Now, reasonably, we have these lows back here. We have multiple objectives in this aggressive movement to the upside, and that's after these lows were taken. But as far as the daily bias, let's go ahead and look at these last quarters. Let's just see where prices came from, okay? So, this is November 1st, by the way. Prior 60 days, we see that this shift, or this quarterly shift, was movement to the downside. And then rebalancing that range. So it seems, yeah. Movement to the downside, and then rebalancing this range. Now, 40 days from November. Back from November. All right, we see that price makes an aggressive movement to take these stops, aka moving into the downside. Now, with that aggressive money, there's large funds moving price to those stops. Price takes those stops. I witnessed this as well, and I witnessed also this more aggressive run here. Now, after these stops were taken, we have our 20-day shift. So these stops get taken, and right here, price trades back to this previous order block before this down move, trades to the order block precisely, and rejects off. Rejects where? To the stops that are now here, here, and here. Well, if I'm saying these are relative equal lows, then all I have to note is the fact that the actual body or volume was traded below here, even though the wicks are even. Still relative equal lows, and we can reasonably expect that retail will see this as a level of resistance, or that there's going to be orders below here, even on behalf of large funds, and those, of course, get swept. So what do we see after those stops get swept? Well, afterwards, we see distribution in the form of price actually, making that move below those relative equal lows. In fact, it even goes below these lows. Afterwards, aggressive buy model in the market, where we see price continuously taking out this high here, these relative equal highs here, this high here, and this high here, now trading more precisely to the halfway point, but not violating it. Now, you can see the body is slightly due here, right? But we're focusing on the wicks as well. Now, we also need to note from November, we're 20 days in. So, in other words, we're in a higher time frame order block. We are coming from a discount below old lows. We have now, smart money paired their orders down here and then went long. Large funds drove price all the way up here. There's large money. Where are they going to distribute? To the buy stops above this high, the buy stops above this high, the stops above this high, and so on. So we can reasonably expect a move lower if we receive indication of that. Now, we can show here, as far as with the dailies, we have this consolidation range. I would want to personally see a more aggressive move out of that before saying, oh yes, I'm expecting price to go lower. In other words, to simplify what I'm saying here, I'm still viewing this as a consolidation. I notice we've taken those lows, and I notice that we've traded below the bodies of these candles, but not aggressively, and not in anything where I could say that I reasonably would expect price to start rebalancing that range. And taking note of the fact that we have been consolidating above an old high, and we can look at that as a turtle soup sell. And additionally, I'm going to wait for more indication for that. But currently, this is what I'm viewing in price action and my internalizations or my thought process on price. Now, does the same logic apply to ES? Well, as far as bias on those higher time frames, yes, it does. Let me move this, by the way. I didn't mean to keep that on there, actually. All right. So here's the order block. Here's a halfway point, or EQ. All right. Now, for that, you see price had previously traded, not exactly to EQ, but it previously traded up here. Now, here's part of the reason I'm not, so convinced yet. First, I want to mention that this gap is noted on my lower time frame charts, which I will switch to in just a moment. There is a gap here. But additionally, we have these relative equal highs. And because it's in correlation with equilibrium of the monthly order block that I am looking at, and also looking at on S, I am reasonably expecting price to run out those highs, at least, before continuing lower. Now, I still need to view quarterly shifts on this. I haven't done it yet. I'll admit that. It's fine. Let's go now to the higher time frame chart. So this is my lower time frame. This is the day and under. I know I did some analysis on the day, but you'll be able to see my notations here, and it's obviously going to be the same thing. Okay? And I can delete these now. This is about a better way that I like to market. It's part of the learning process, is finding how you like to mark your own charts, to be honest. But anyways, that's another story. So even just looking at this range, disregarding what I've said in the past, all right, it's a very, very much the same thing, okay, even here on ES. Now, the difference with ES here, we haven't traded above that high we have here. So in other words, this is taken out the stops above an old high, whereas we don't see that in ES. Now, we did have this gap here, which is refined on a lower time frame. It doesn't look like it here because of the wicks, but there was a volume imbalance, in other words, a vacuum block, and we can reasonably expect price to trade back to that. I called this out many days before it happened, and I knew that price was going to drive there. I anticipated that using my prognostication based on what I've learned. Regardless, we have to keep in mind there is a massive amount of liquidity above these highs. You also have to keep in mind for the order block that we have equilibrium, and we are still below it. So I can reasonably expect price to run out these highs before continuing lower. Of course, the same applies with us being in the range that we could expect a quarterly shift, but we're not going to use a consolidation above a high to do that. It doesn't have to take out these highs, but what I would say is if we have institutional sponsorship driving price all the way up here, that means large institutions are sponsoring this movement higher to this high. If we have that and we can understand that market makers are driving price there, why would they drive it here not to run those buy stops? That personally to me does not make a lot of sense. They would look to distribute the positions that they accumulated down here at this previous order block. They would look to distribute them above an old high, and at least on this chart, that would be validated, or that would be okay. I can expect price to trade up there because of where the order block is. Now, for the NASDAQ, we've already traded above there. Again, this movement right here, we have to keep in mind that this is still not an indication that price will want to go lower. Now let's see why. Why would I say that? Well, ultimately, what are we doing? What are we viewing price doing? Now it's the same thing all last week. I didn't make a video on Friday, but it's been the same thing. See, consolidation, just this sideways price action. Why did price dip down here? Well, because there are stops here. This is viewed as a retail level of resistance. So there is stops down here. Now, here's another thing. We do know that retail-minded traders are going to look to pick highs and lows, and so we don't know, again, where price will go, so no judgment, to those traders or anything, but us trading down here to the retail mind that would pick highs and say, okay, yeah, now we're seeing the downtrend start. That's obviously going to engineer liquidity as well. Now, keep in mind that, large funds, they're targeting where pending orders are, and pending orders when price was driven up here, right? There's going to be orders below here in the form of sell stops, and price obviously takes them out. But where is it also trading? Well, this very large displacement leg. And then we have something that's a little more refined here, where we have this break below an old low. We also have that here, this break below an old low. Now, I understand that there's stops here. I'm going to pay attention to what price does. If we keep seeing this, where we see a low form, see aggressive movement below it, then we can reasonably expect price to continue lower because we have this large range. But price may then do what it's been doing in the form of a buy model, and it would be then targeting these highs back here, this high here. There's liquidity above that in the form of everyone who shorted here. Okay, liquidity above this high, and liquidity, of course, above this most recent high. So we will take note of that as well. Now for the hourly, let's go ahead and I don't even have, let me make sure this is Thursday. I'm just going to delete that, and then we don't even have our weekly range defined yet, so I'm just going to add those. There we are, and we'll do the most current day. 12, okay, there we are. And let me, since we're on Monday, let me delineate that as well. And let's clear up this, because I really do not need this much data. I just keep doing it, so I'm going to clear some of these real quick. Okay, I'll just clear up to here. Okay. We only really need about 4 weeks of data. This is still, you know what, we'll delete one more. I'm going to delete one more. Just because these lines on the hourly really, it's a lot. It's a lot of stuff. I want to be able to see these different levels back here without a bunch of lines going through it. But anyways, we just need to understand the weekly range. So, we had last week, consolidation, taking out stops on Thursday. Thursday created the weekly low last week. And Wednesday created the weekly high. So Wednesday ran out buy stops. Thursday created a new low. Okay. This Monday, we had these two relative equal lows. We also had these lows back here. Price took those levels of stops, and it was easy because there was also CPI back here, which is still noted. All right, but it was easy. We can reasonably expect that to be traded. Now, this is what I would like to continue seeing if I'm going to begin to start the idea of looking for a sell opportunity. All right. Now, we'll go into the 15 in just a moment here, but let's make sure we do the same thing for this based on what I said previously. Okay. So, here we are. We still have stops resting above here. Now we see price consolidating, but what we also notice here is we see a very much an unwillingness to take stops. We have these lows here, these lows here, these lows here. Okay. We have these lows. We do see price actually trade below them with the wick, so those stops get taken, but that's the only reason. That spike down there is simply just to take out those stops. Now, where do we still have a ton of liquidity? Very clean highs. So there are going to be pending orders here in the form of buy stops, and we can reasonably expect price to trade to that level of liquidity. Now, we're not showing the same thing that we're seeing on NQ. And so, in other words, this is showing weakness to the buy side. We're not really seeing price take those lows. Now, NQ is trading lower, but why is it trading lower? It's just trading lower to take those stops. Now, let's see if we go back to ES, if I can refine this and look at our weekly range. So, here we go. Okay, and 12 a.m. Marked 12. There we go. That's right. And then this is the red. So, same thing. Last 2 weeks, consolidation. The only difference is these lows remain intact, these lows remain intact, these lows remain intact, these lows remain intact. Why are those lows remaining intact? Because we're in a buy program. Now, we have these lows back here that were created on Friday. And we see price, has traded below those today. Movement to the downside above that previous high. All right, and additionally, we have these lows back here. Tons of liquidity below those lows. Now, if price is to trade below those lows and do it aggressively, then we can, start expecting a shift in market structure. But with my idea, I'm looking at these lows being violated not as a shift in structure, but just viewing it as price actually targeting the stops before it propels price higher. So I demand more information and more indication that price would want to continue lower. Ultimately, we're going to continue expecting higher prices until we get that indication based on our higher time frame analysis or directional bias, where we know that pending orders are lying in the market. Additionally, paying attention to order flow, right? This old high, okay, trades above it, liquidity pool, all right. Smart money who accumulate positions even below this consolidation. Now we're able to distribute them above an old high, and then after it's distributed, we see back an aggressive movement to the sell side. What do we have below here? Well, we have these relative equal lows. Additionally, this is the gap that I was mentioning. Oh, sorry, not that one. I'll delete that actually. This is that gap I was mentioning. I actually called this well before it happened, but we're looking at the last 2 weeks. We have to understand that, firstly, we're at a point where we're 20 days from November 1st, so we can reasonably expect a quarterly shift. We need more indication of that. But we also have to understand, where is price going to move from a consolidation? It's going to move into an expansion. If that expansion wants to trade higher than the framed order block that I have, or the order block I've outlined, then reasonably, if price is going to take those highs, I would be looking for price to continue that price action until indication otherwise. And that's just what we do. We stick with our buys until price shows an indication otherwise. We don't pick highs, we don't pick bottoms, and that's pretty much what ICT talks about. Now, for this, the weekly range, of course, there's really not much data to go over here. Pretty much the same thing I've been preaching this whole time. Now, let's go to the 15-minute, because the 15-minute is going to give us insight on the daily range, how price opened, how price closed, and additionally, I need to mark today's highs, which something more or less that I can do, on a personal study. I also hadn't done it for Friday. Didn't do anything on Friday. Don't even feel bad about it. I was just chilling, man. Alright, so 7:31. So right. Boom, right there. Okay. And also delineate today. This high here. I don't know who the fuck is using hot. Some of my friends using hot pink lines on their chart. I wonder who. I wonder if it's Andrew or Toby. It's one of them. Alright. And this low here. So let's just overall get a look at what price did today. We have the opening price, midnight opening price. Price trades above that. And this is what we would see as far as with accumulation, manipulation, distribution. This is what we would see in a market that is going to continue lower. We would ultimately see price open. We have the opening price. Manipulation above that happens during London, right? Price trades into that. It's also trading back to this previously inefficient range. We also have a vacuum block up here if you take a note of it on the 15-minute time frame. You can reasonably expect price to trade back to that eventually. When and how long is another question that we have to determine. But I'm getting ahead of myself. Listen, accumulation, right? And this would be the manipulation, aka price trading then above that high. The distribution is price then trading down here and trading back up into that previous range. But we trade above that. That's a manipulation. The trade above the opening price, tricking traders into thinking that, you know, we're going to continue higher right here. And we see, of course, it does the opposite. It engineers liquidity, completely goes for the sell stops. Now, all the way up until noon here. So this is noon. So we wouldn't even be, if we were trading in the PM, look. Here we go, 1:30. So 1:30, at this point, really the only thing that we can expect this price to want to reach for this high at 1:30, right? Because we've already taken sell side here and here. We've taken those stops. We had an aggressive movement to the downside. Then 1:30 comes around, and the only possible thing we would have to frame a. Let's see actually if I can do it on a lower time frame. Let's see. Just to for the hell of it. Where's 1:30? Okay, here's 1:30 right here. 1:30 is when we're going to reasonably start looking for setups. So if I had that in mind, and I have my bias in mind, all right, if I was looking, say, for setups today, we have this high, and we have a run above it. Prices now return to it way later on, in fact. Let's see if there's a way to actually catch this move. Or if this would have just been a runner, too aggressive. So run above this high. Does it return to it? Nope, not on the 3-minute. How about the 2-minute? Do we have a setup here? One old high. No, it doesn't return to it. And lastly, on the 1-minute. See if we can find it there. Let's see, it's 1:30 again. Okay. So actually, it's a little more. It's actually a lot more clear here. In fact, I might have been framing it wrong. Let me go back here. So we actually have a different idea. Yeah, actually. Okay, I understand now. So after 1:30, price draws back into this range. Probably tricked a lot of people into thinking that it was going to continue lower. And instead, it goes in the opposite directions, of course, because there's buy stops above here from the afternoon. And ultimately, we'd be expecting higher prices still. We know why price is drawing down there, which is just simply to take stops. But as far as framing the market structure shift, let's look right here. We have a low form. We have a high form. Price aggressively trades above that. You see this kind of whipsaw price action, and of course we're in a consolidation, so we know that price is just moving sideways overall. But anyways, that aggressive move above it, price returns back into this range here. Okay, this large displacement range trades to right here, or trades to this void, and then goes into the opposing direction to target these buy stops. So we can look at first two things. This trading above this high and then retrading back down into that. Would view that as a market structure shift from right here. Also trading back into it. We can view this trade above this old high and then see the run below these lows as price actually targeting stops or sell stops that would be below here, right? From people who think, oh yeah, price has gone lower, it's going lower, now it's going to go higher. Buy stops get targeted, and right after that liquidity pool gets taken out. Also pairing that with this imbalance to the upside, and then boom, aggressive movement for a targeted high. That's how we could frame the idea on the PM. For the AM, let's go ahead and look. And I'm just doing like a rough, I still have a lot to learn. Let's see where we are around 8:30. In fact, let's go to the 5-minute. Let's do this real quick. Okay. So this is 7:10. Consolidation, so boom. It's pretty much from 8:30 when we would begin to looking for setups. The very first thing we can notice at 8:30 is this shift in structure, aka this old low here being aggressively taken out at 8:30, and price just takes off from there. Let's see if there would have been any way. Okay. Not there. 2-minute. Anything? What's this? 8:16. Okay. Well, if you really wanted to, and this is very high frequency 2-minute, right? But if I wanted to be contrarian, expecting price to move to a level of sell side, I could look at something like this on a refined time frame, an aggressive run below this low, price then retrading back into that, and then continuing to sell off. Maybe I could have potentially, if I saw that happening, get in on that, but I still wouldn't think of that as highly probable or a highly probable trading scenario. I'm just noting what I'm witnessing here on the 2-minute. So let's get back to the 15-minute and close this off. So I've kind of sidetracked a little bit. Here we go. Accumulation, manipulation, distribution. All right. See something actually a little bit different here, it seems. Actually, that's right, yeah. So, between both of our pairs, there's one very noticeable difference. While NQ takes out the highs at the very beginning of the day, prior to it, ES shows weakness. It shows weakness in the form of making that aggressive run below these lows, later retrading it, but not taking out the highs or not taking out the buy stops, as this had, taking out the buy stops above here and here. This doesn't trade above that high. We then have this consolidation. We see a break from that consolidation. Now that's from 5:30. A break from that consolidation at around 7:30, so we're still not even trading here. It returns to that 8:30 when we start looking for setups. So that would be right here. 8:30, we have that aggressive displacement lower. Price returns, doesn't return back here, and continues lower. So, if we anticipate price to continue going lower, I would expect these highs to remain intact for the most part. Now we're gonna not get too caught up here on lower time frame. There's also more analysis that needs to be done here for ES specifically, but I am taking note of the fact that at the beginning of the day we did not take those highs from Sunday or Friday evening, right? Sunday evening, whatever, Friday's trading day, into today. We're gonna take those stops. What we did do is we ran out this low here, sure, a short-term low. We didn't run out this low. What is this? Well, this is going to be an intermediate term low. Why is it an intermediate term low? An intermediate term low is defined by a low with a higher low to the left and a higher low to the right. Think like a head and shoulders. So, if this is an intermediate term low, I would expect price to continue to respect that, just as I would here. But, additionally, if I look here, okay, let me look prior, so that's 2 days ago. Let's see if 2 days ago. Do I have the same pattern? No, I don't. Don't have the same pattern at all. Looking for that low, higher low to the left and right? No. See price aggressively trade lower. So, we're going to continue looking at what price has in store and what it wants to do. Now, this very last segment, I want to just put here in the video because I know that nobody is watching this part. Probably not. And if you are watching this, I want to give you an insight into where my mentality is at right now, what I've been thinking about. And I'm going to explain this as in if I was looking in a mirror and talking to myself and how, honest I'd be with myself. Lately, as far as in the physical sense, I have hated myself deeply despised myself, looking in the mirror, just very unhappy with what I look like. But I haven't let that stop me. In fact, I've let it empower me. I've understood that when I was at my lowest point about a year ago, that I had no ambition and I had no more drive. And when I finally found that, which is what I'm doing now, I was able to contend with working something that who wants to work? Let's be honest. Who wants to work? And the more I develop physically, the more I develop mentally, the more I develop as a student, the more I develop just as a person or someone who is aspiring to do more, the more I realize I outgrow my family, who believes that their position or the predicament that they're in is a something that happened by luck, or in other words, they were unlucky, is how they kind of view it, and they kind of see it as, I'm just gonna pretty much doing the same shit and expecting something new out of it, right? As in, I won't get too deep into that or into the nitty gritty, but for example, my mom, and I love my mom, but she believes that her current position is not her fault at all. She wonders why she's in that position and holds no accountability for the position that she's in. I meet a lot of people like that. I meet a lot of adults like that, and it's almost like I just don't want to be around it anymore. I don't want to be around people. I don't want to be around my coworkers who share the same ideals. My family doesn't understand me. They don't know what it's like to sit here, to study, to put in countless hours every week. Dude, I put like 90 hours in last month, like 60 to 90 hours, just roughly. Okay. My family probably didn't put 1 hour into anything. My family, part of them, are obese. They do not care about their health. They do not see an issue with it. Now, I'm not trying to be overly critical on them, but I want to say that the more I develop, not only as a trader, but as I develop as a person, the more I realize that the people around me really aren't taking life as seriously as I am. I'm sitting here 10:28 at night, while most people are probably sitting down to have a drink, maybe a nice beer after work, sitting down to do anything else besides what I'm doing, which is being productive in my own mind. and I sound judgmental. I sound like a prick. I sound arrogant. And to be honest, I've realized that arrogance really isn't such a bad trait. It is only externally perceived as such. And what arrogance really is, or why would I say that? Arrogance is really just a high sense of pride within yourself. So to those who see, oh, this person is very, very prideful, obviously an insecure person, a person who's not secure with himself, will view that and they will feel insecure. They will say, oh, look, John, or whatever, is being so arrogant. But there's a few good benefits to thinking like that. Firstly, you're going to keep unwanted people away. I don't waste my time with fat people. I know that's a hot take. I'm just going to say, listen, I don't spend my time around fat people. Why? Yes, sure, part of it is looks, I won't lie. But additionally, it's an indication of how you treat yourself. If you're unhealthy, if you're fat, I've been fat, so I can say it, and I still feel fat from time to time. But there's a difference between someone who is fat and genuinely, working on being better, and those who are fine being content with it, content with eating like shit, and content with being weak-minded, dealing with their emotions with food. And I despise those people. I despise people who have no ambition or motivation, and I despise them in the sense that I respect their path, but I would never want to be friends with them. I would never want to be friends with a fat person. I would never want to be friends with someone who's not driven, someone who's not goal-oriented. And you can say, oh, wow, you're an asshole, you're a prick, you're being judgmental. I would say that that's success-oriented thinking, that I'm selective of the people I spend my time with. And I would say that, someone who keeps an open mind and thinks that's a virtue, right? Or that's some kind of greatness, that's a very dangerous thought. It's not a virtue or something to be proud of, keeping an open mind. Most of what you hear, as Mike Mentzer said, is false. Most of what you hear is false. And people talk a lot of shit. I'm just going to say, I refuse to keep an open mind, and I refuse to accept the thoughts of others as a reality. And I refuse to be another person in my family who blames everything and everyone other than themselves, who, waits around like someone's going to come help them, like just crying. Oh, someone come help me, someone come help me, instead of taking the necessary steps to progress in your life and do something better. And I don't really care how it sounds anymore. It just sits on my head. I think about it all day. I think about it all the time, about how just a lot of people aren't driven. A lot of people my age, a lot of people in general, you think you're driven. What are you really doing to better yourself? Because I can tell you what I've been doing to better myself. All right. And, you don't really hear that with people. Now, respectfully, everyone has their own path. I've been in points where I've been like that as well. But there's something to be said about an individual who overcomes those adversities and is better because of it. Being fat is okay. Being stupid is okay. Being lazy is okay. I've been all three. Staying lazy, staying fat, staying broke, staying unmotivated is not okay. And hanging around people like that as someone who is ambitious is like giving yourself cancer. If you want to, I'll just tag on to the saying, show me your 5 closest friends, and I'll show you your future. That's how I feel. So, just some raw, unfiltered thoughts, things that I've been thinking about. And I think that for now, I'm fine being alone. In fact, I think I'd prefer being alone. I don't relate with my coworkers anymore, I don't feel like. I don't relate with family. I don't have friends. It's lonely. It's a lonely road to the top, man. But I'm more fucking happy than I ever have been, in the sense of moving towards something, being progressive. If I stop doing this, I will feel shit again. And the reason why is I'm living my purpose right now by pursuing things that are meaningful to me. I'm a success to myself because I'm pursuing things that I care about. So I'm going to leave it at that and end it here.